As I look back over my investment history, I recognize that there are several companies or movements that have changed the investment horizon for us retail investors if we had only recognized them in the early stages. Certainly one of those is Netflix. It's changed the way we watch TV. Tesla has changed the way we think about automobiles. And then there's Bitcoin. And in each of those situations, if you'd recognized it early enough, it could have made a huge financial difference in your life. Well, I came across a company with the assistance of Bard. That's one of my AI agents. He first brought it to my attention. It's a company that's called AST Space Mobile. What I didn't realize, and what Bard and Samantha then, who did an analysis of AST Space Mobile, told me that there are 3.5 billion people, that's with a B, in the world who don't have access to this. They don't have access to mobile phones. They don't have access to the internet. They just don't have it. How would that change their lives? How would that change the investment opportunity if you got in on the ground floor of that, of AST Mobile? The other thing that I've recognized, the other big change, is that there are at least that many, it's going to be more like 100 billion people who don't have access to good investment information. It's the truth. Wall Street has access to all the good investment information, and they make money off of us who just come as a herd behind them. That has changed. And there's a small, very tiny company who is changing that. That company is called Best of Us Investors, founded by Kerry Grinkmeyer. Oh, that's me. I am like changing the world. But I want to prove it to you, but it's going to take about 30 minutes of your time, because what I want to do in this video is let you listen to Samantha read the financial report that she created for me through ChatGPT and the prompt I gave her to explain in detail the investment opportunity that you have for AST Space Mobile. Maybe then you, the 66, billion people who invest in the stock market on their own, can step into the world and have access, much as 3.5 billion people are going to gain access to this through a company called AST Space Mobile. Take 30 minutes and listen to this.
AST Space Mobile Inc., ASTS, Financial Health and Stock Forecast Report. Executive Summary. Pioneering space connectivity, AST Space Mobile is building the first space-based cellular broadband network to connect standard smartphones anywhere on the globe. The company's ambitious technology and strategic partnerships have fueled a meteoric stock rise, up 440% since 2021 IPO, but also bring high volatility and execution risk. Financial and market outlook. ASTS remains pre-profit, investing heavily in launching 60 satellites by 2026 to tap into a massive $1.5 trillion global telecom market. It holds $874 million cash for this build-out, enough to reach initial service launch. If the rollout succeeds, revenues could scale from near zero to hundreds of millions by 2026 to 27, driving a path toward break-even by 2027. Recommendation. Speculative buy. Small allocation. ASTS is a high-risk, high-reward opportunity. We suggest risk-tolerant investors consider a modest speculative position. The upside of a global connectivity breakthrough is enormous, but position sizing and patience are key. More conservative investors may hold until clearer progress is shown. Maintain a long-term view through 2026 to 2028 and expect extreme volatility. What does this company do? AST Space Mobile is a telecommunications company that plans to deliver broadband internet directly to everyday mobile phones from satellites. In essence, it is launching a constellation of cell tower satellites that will fill gaps where terrestrial wireless coverage is absent, such as rural areas, oceans, and developing regions. The company operates a wholesale model, partnering with over 50 mobile network operators, MNOs, like AT&T, Vodafone, and others. It will provide coverage extension as a service. Carriers pay ASTS to connect their subscribers via the satellites when those users are outside of cell tower range, creating a new revenue stream from currently unconnected populations. Financial health. Letter grades assess ASTS's fundamental health. Profitability. F. ASTS is not yet profitable and is still in a pre-revenue stage, only $0.7 million revenue in Q1 2025. It posted a net loss of $45.7 million in the latest quarter and a loss of over $300 million in the last year. Operating margins and return on equity are deeply negative, no earnings until at least 2027. This early-stage profile results in a failing profitability grade. Liquidity. A. The company's liquidity is very strong. ASTS held $874.5 million in cash and equivalents as of Q1 2025 after recent financing, up from $567 million the prior quarter. Current assets far exceed current liabilities, giving a current ratio well above 3x, ample buffer for near-term obligations. This cash hoard should fund roughly 2 years of heavy capex. Liquidity is bolstered by additional financing lines, e.g. a $460 million convertible note and $100 million equipment financing, though drawing those would add debt. Solvency. B. Solvency is adequate for now. ASTS's balance sheet has about $1.37 billion in assets versus $603 million in total liabilities, Q2 2025. Its debt to equity is moderate, and much of the liability is long-term, convertible notes and low-interest loans. With no earnings, interest coverage is negative, but the company's cash can cover interest and obligations for the medium term. The key solvency concern is future capital needs. ASTS will likely require more funding, $500 plus by 2026, to complete deployment, but management is pursuing non-dilutive sources, e.g. export credit agency loans, to mitigate shareholder debt load. Efficiency. D. Efficiency metrics are weak given minimal revenue. Trailing 12-month revenue is under $5 million, while operating expenses exceeded $250 million. Asset turnover is near zero and ROA is deeply negative. ASTS has spent over $1 billion on R&D and infrastructure to date, with no operating income yet. Until the satellite network becomes operational and paying customers are online, efficiency will remain poor. On a positive note, internal efficiency is improving, e.g. the company reduced quarterly R&D expense by $9.3 million in late 2024 through vertical integration. Growth and Rule of 40. AST Space Mobile's growth profile is in stealth mode now but set to explode if plans materialize. In 2024 to 2025, revenue is negligible, but year-over-year growth rates are astronomical in percentage terms. Q1 2025 revenue of $0.718 million was 7 times Q1 2024's $0.1 million. Starting in late 2025, initial commercial revenue is expected as satellites deploy. Analysts project substantial growth, $300M revenue in 2026, $958M in 2027, and $2.2B by 2028, essentially a CAGR above 100%. Earnings per share will remain negative through 2026, but losses should peak as one-time build-out costs subside. The company is forecast to break even by 2027, at which point the Rule of 40 revenue growth plus profit margin might become relevant. Currently, ASTS fails the Rule of 40, e.g. 2025 revenue growth could be 700% plus, but EBITDA margins are around minus 100%, summing to far below 40. By 2027 to 2028, if ASTS achieves 50% annual growth with even 0% to 10% margins, it would finally satisfy this rule of thumb for healthy growth companies. Investors should thus expect rapid top-line expansion, but accept that profitability, the second part of the Rule of 40, lags by a few years due to the massive upfront investment. Market opportunity. AST Space Mobile's target market is enormous, essentially the global mobile communications market. Annual telecom services revenue worldwide is about $1.5 trillion, and ASTS aims to capture the slice related to extending coverage to the unconnected. Roughly half of the world's population lacks broadband connectivity, a gap ASTS hopes to bridge via satellite. In concrete terms, the company's Phase 1 service focuses on 49 equatorial countries with 1.6 billion population, of which hundreds of millions are without mobile internet. By partnering with existing carriers, ASTS can rapidly access large user bases. Its 50-plus signed MNO partners collectively serve 3 billion subscribers who could roam onto ASTS's satellite network when out of terrestrial range. For example, Vodafone, a major investor, will leverage ASTS to expand coverage to 600-plus million European subscribers via a joint venture. In the long run, ASTS's total addressable market includes not just individual smartphone users off the grid, but also Internet of Things, IoT, devices, maritime/aviation connectivity, and emergency services. By 2030, the company projects 180 million subscribers on its space network, just in its initial markets. Even with modest ARPU, say $5, 10/month via revenue sharing, that could yield on the order of $10+ billion annual revenue, demonstrating the scale of the opportunity if ASTS executes well. Competitive landscape and M&A. Currently, ASTS has no direct public competitors offering broadband to standard phones, giving it a first-mover advantage. Traditional satellite operators like Iridium and Globalstar target niche satellite phone and IoT markets and are much smaller. See peer comparison. In lieu of acquiring companies, AST Space Mobile has pursued strategic partnerships, e.g. with carriers, technology firms, and vendors, to accelerate adoption. No major mergers or acquisitions are anticipated in the near term. The company's focus is on organic deployment of its proprietary network. One could speculate that a telecom giant or tech company might eventually attempt to acquire ASTS if it proves indispensable. But for now, ASTS is firmly independent and supported by its roster of partners rather than looking for an exit. Regulatory and geopolitical factors. ASTS's global ambitions face regulatory approval in each country. This is both a hurdle and part of its moat, since getting licenses is hard. The company has already navigated key U.S. hurdles, obtaining FCC spectrum permission, even an FCC special temporary authority to test on public safety band 14, and is working through international licenses. Resistance from incumbents is a potential risk. For instance, T-Mobile opposed ASTS's FCC application, fearing interference with its own planned coverage efforts. Similarly, some governments may be wary of space-based networks that they don't fully control, especially authoritarian regimes that enforce internet blackouts during unrest. Geopolitical tensions, e.g. sanctions, export controls, or even anti-satellite actions in conflict, also loom as wild cards. ASTS mitigates these risks by partnering with local telecom providers who have regulatory clout, e.g. Vodafone is helping ASTS secure licenses in African and Asian markets, and by highlighting the public interest aspect of its service, bridging the digital divide. Overall, while regulatory approvals are a gating factor, ASTS's progress to date suggests these challenges are surmountable, albeit requiring time and diplomacy. Peer comparison. AST Space Mobile is often compared to both traditional satellite communications firms and emerging space tech peers. Below we contrast ASTS with key US-based peers. Iridium Communications, IRDM, a mature LEO satellite network providing voice and data via specialized satellite phones and IoT devices. In 2024, Iridium had $830.7 million revenue, plus 5% YOY, with positive net income of $112.8 million. Iridium serves 1.8 million subscribers, mainly IT, and is profitable with 14% net margins. Its market cap is about $3.4 billion, valuing it near 4 times sales, a typical multiple for steady, asset-heavy telecom businesses. Iridium's growth, 5-7% annually, is modest, reflecting a niche but stable market. Unlike ASTS, Iridium requires special devices and does not offer broadband speeds, so it's more of a narrowband competitor. Globalstar, GS80, another satellite operator, known recently for enabling Apple's iPhone emergency SOS feature. GS80 had $250 million revenue in 2024, plus 12% YOY, but still ran a net loss of $63 million. It emphasizes adjusted EBITDA profitability 54%. Market cap is roughly $3.3 billion, high relative to sales, partly due to $1.7 billion in contracts with Apple and others funding its next-gen constellation. Globalstar's focus is also narrow, low-bandwidth messaging and IT, though it plans a new satellite constellation for direct-to-cellular services in partnership with its big customers. SAT's terrestrial spectrum assets and partnerships, e.g. with Apple, give it a strategic role, but its service capabilities, no full broadband, and scale are not as disruptive as ASTS's potential. Emerging competitors. The concept of direct-to-regular phone communications has drawn others. Link Global, private, has launched a few test satellites to provide basic texting connectivity to unmodified phones. Link was first to send an SMS from space and holds patents on aspects of direct satellite cellular tech. It even warned that unless ASTS circumvents Link's patents, the threat of litigation exists. However, Link lacks significant capital, raising tens of millions, not billions, and infrastructure. ASTS's advantage is far greater scale and carrier backing. It's possible these two could end up in a licensing agreement or simply race ahead on separate trajectories. Meanwhile, SpaceX, private, has announced a Starlink T-Mobile collaboration to eventually enable texting and possibly calls via Starlink satellites. That system, however, is not expected to support broadband or standard phones at scale until Starlink's second-generation satellites are fully deployed, and even then it will initially handle only low-bandwidth messaging. Amazon's Project Kuiper, launching in 2024, is a broadband LEO constellation like Starlink, but currently targets user terminals, dishes, rather than phones. In summary, AST Space Mobile presently has a unique position. Its valuation, see below, reflects that future dominance rather than current fundamentals. Valuation gap. ASTS's market cap $13.14 at $54 per share is dramatically higher than peers like IRDM or GS80, $3 each. Despite those peers having 250 times to 1,000 times more revenue today. ASTS trades at an essentially infinite PE, no earnings, and astronomical PS. Stock price already factors in multi-billion revenue that doesn't exist yet. This valuation is a double-edged sword. It underlines ASTS's enormous growth expectations and first-mover premium, but also means the stock could be very sensitive to any delays or setbacks. By 2027 to 2028, if ASTS hits its targets, approaching $1B revenue, its forward multiples would normalize rapidly, whereas failure to execute could make the current valuation unsustainable. Investors are effectively priced in for a moonshot success, unlike the relatively grounded valuations of Iridium or Globalstar, which are based on established businesses. Product and service innovation. BlueWalker 3 test satellite. Illustration: AST Space Mobile's prototype unit with a 693 square feet phased array antenna. It conducted the first ever direct 5G call from space in 2023, proving that standard smartphones can connect to satellites. AST Space Mobile's product is a technological first, satellite-based cellular service for ordinary phones. The company's innovation pipeline is robust, spanning satellite hardware, software, and an ecosystem of carrier integrations. Direct-to-phone breakthrough. ASTS proved that an ordinary smartphone can connect directly to a satellite for broadband service. In November 2022, its BlueWalker 3 test satellite, with a 64M Superscript 2 phased array antenna, unfolded in low Earth orbit and later facilitated the world's first space-based 5G phone call. In April 2023, between Texas and Japan. It also achieved data downloads and video streaming using standard 4G per 5G smartphone frequencies, all with no changes to the phone. This demonstrated ASTS's core technology, an array of small cells in orbit that can communicate with phones on the ground over regular cellular bands. The feat required solving extreme technical challenges, Doppler shifts, signal power, latency management, and it validated ASTS's approach in a way no competitor has yet matched. Satellite constellation and scale-up. AST Space Mobile calls its satellite platforms Bluebirds. The initial operational constellation, Bluebird Block 1, consisted of 5 satellites launched in September 2024. These are essentially proving grounds for the commercial service, each equipped with large antennas, 64M Superscript 2, capable of covering sizable regions. Starting in mid-2025, ASTS is transitioning to Block 2 Bluebirds, larger, more powerful satellites roughly 223 square meters in size with advanced electronics. The first Block 2 units ship in Q2 2025, and ASTS has 5 launches scheduled in the next 6 to 9 months via SpaceX and others. Over 60 satellites are planned by end of 2026 to achieve continuous global, multi-country coverage, with initial commercial service targeted in 2025 for select regions. Impressively, these new satellites have 10 times the capacity of earlier ones, thanks to in-house designed ASIC chips enabling 10 gigahertz of signal processing each. This allows fewer satellites to cover more area/data, improving long-term economics. ASTS is also ramping production. It expanded manufacturing facilities in Midland, Texas, to 185,000 plus SQ feet and built additional assembly space in Florida and Spain. By late 2025, the company expects to produce up to 6 satellites per month at full pace. This vertically integrated approach, building satellites largely in-house, should reduce unit costs over time. Note, recently, inflation and launch market tightness have pushed costs up. ASTS reports the cost per satellite rose 10% to $21, 23M from $19, 21M, due to pricier launches and materials. Management hopes that increasing rocket supply, e.g. more SpaceX flights, new launchers, and potential easing of inflation will help stabilize or lower these costs in coming years. Defensible moat. IP and regulatory. AST Space Mobile has invested heavily in R&D, over 7 years and $1 billion plus, to develop its proprietary technology. As a result, the company has built a sizable intellectual property portfolio, 156 global patents, 59 granted, across 31 patent families, and an even larger number if counting pending applications. Over 3,400 patent claims in total have been filed. These patents cover aspects like network architecture, antenna design, and frequency management for satellite cellular integration. This IP acts as a moat, making it difficult for latecomers to copy ASTS's methods without licensing or litigation. Moreover, ASTS has achieved key regulatory firsts, notably an FCC license and international coordination for use of standard mobile spectrum from space. It secured 45 megahertz of 4G per 5G midband spectrum in the US for its system and similar permissions in countries like Nigeria, Papua New Guinea, and others via partner networks. Being first to navigate these approvals gives ASTS a de facto regulatory mode. Any competitor must follow through the same gauntlet of coordination agreements, and spectrum in many bands might already be spoken for. On the technical side, ASTS's satellites are also rocket agnostic, designed to launch on various vehicles, SpaceX Falcon 9, Blue Origin New Glenn, ISRO rockets, which gives it flexibility and leverage in launch scheduling. Partnership ecosystem. Rather than compete with terrestrial telecom companies, ASTS chose to partner with them, effectively turning potential competitors into collaborators. This strategy greatly lowers market entry barriers. ASTS now has signed agreements with 50 plus MNOs globally, including giants like Vodafone, AT&T, Verizon, Rakuten, Telefonica, and Orange. Collectively, these partners cover billions of mobile users. The partnerships often involve revenue sharing once service begins and minimal incremental cost for the carrier. The user's regular SIM and phone just connect through ASTS when out of range. One landmark deal is a 10-year commercial partnership with Vodafone through 2034 to integrate ASTS service in Europe, with a joint venture, SATCO, being set up in Luxembourg to serve that region. In Japan, ASTS is working with Rakuten Mobile. In North America, AT&T and Bell Canada are on board, and recently AT&T used ASTS satellites to send a 4G LTE text message in Hawaii. These alliances not only validate ASTS's tech, carriers have tested it and believe in it, but also create a distribution moat. Once ASTS is embedded in many carriers' offerings, it's hard for a rival to persuade those same carriers to switch to a different satellite solution. Additionally, ASTS benefits from strategic investments by partners. Rakuten, Vodafone, American Tower, and Samsung were early equity investors, and in July 2025, Google invested $203 in ASTS, forging a relationship that could yield cloud or Android ecosystem integration down the line. This broad coalition around ASTS's technology makes it the frontrunner in an emerging industry, with considerable network effects if most major carriers use the ASTS network. Future innovations. AST Space Mobile's pipeline extends beyond just getting satellites in orbit. The company is exploring next-generation services like IoT connectivity for cars, sensors, and devices that currently can't connect off-grid, and eventually 5G advanced features delivered from space. They are likely also leveraging advanced software, possibly AI or ML, in network operations, e.g. dynamic beamforming, adaptive power control, predictive traffic management, to maximize the efficiency of the space network. While not much is publicly detailed on AI, ASTS's system will generate massive data and requires complex real-time decision-making, managing thousands of concurrent phone links across moving satellites, which is ripe for algorithmic optimization. On the hardware side, ASTS plans iterative improvements. Each new batch of satellites, Block 3 and beyond, could increase capacity or reduce cost. They've mentioned potentially using laser inter-satellite links in future to route data in space and upgrading user experience from 4G towards full 5G broadband speeds, 100 plus Mbps, as technology and spectrum allow. Essentially, ASTS is building not just a satellite constellation, but a space-based extension of the cellular network that will evolve alongside terrestrial 5G per 6G standards. This continuous innovation mindset is critical, as competition will surely advance. ASTS needs to maintain tech leadership and keep expanding its moat in the sky. Price forecasts, 2026 to 2028 scenarios. The following are scenario-based share price forecasts for ASTS at the start of 2026, 2027, and 2028 under different assumptions. Underlying estimates assume a generally positive macro environment, e.g. 1 or 2 Fed rate cuts by 2025 with inflation moderated, a soft landing that supports growth stocks. We also factor in ASTS's need for additional capital, potential dilution, and adjust the discount rate, WCC, in each scenario to reflect risk, roughly 15% in the conservative case, 13% in the base case, and 10% in the aggressive case, lower risk as the business matures. Conservative case, slower deployment, delayed revenue January 2026, $30 January 2027, $40 January 2028, $50 in this pessimistic scenario. ASTS faces delays and higher costs. Satellite launches fall behind schedule, perhaps only half the constellation up by 2026, and network performance is initially limited. Revenue ramps very slowly, e.g. only $100M by 2027, due to technical hiccups or limited market adoption. The company also might need to issue significant equity or debt in 2026 to bridge funding gaps, introducing dilution and interest burden. Investors, seeing setbacks, assign a higher discount rate to future cash flows, and the stock trades down in the mid-$20s to low-$30s through 2025. By January 2026, it's around $30, nearly 45% below the current price. As some service eventually comes online, the price recovers modestly. By January 2027, perhaps $40, assuming ASTS finally achieves meaningful revenue, but still no profits. Entering 2028, ASTS might approach $50 if it's on the cusp of cash flow breakeven, essentially back to roughly today's price after years of disappointment. This outcome implies ASTS stock sees no net gain over 2024 to 2028 aside from volatility, reflecting execution shortfalls. For context, $50 in 2028 might value ASTS around 10x 2028 sales in this scenario, still not cheap, so the downside could be worse if delays are severe. Moderate base case, plan largely on track January 2026, $60 January 2027, $80 January 2028. $100 This scenario assumes AST Space Mobile executes according to its current guidance, with only minor hiccups. By late 2025, the company begins commercial service in selected regions, continuous text/call coverage, and perhaps recognizes $50, 75M revenue in H2 2025 as guided. Most of the 5 planned launches succeed on time, so by year-end 2026 the full 60-satellite constellation is in orbit, enabling near-continuous global coverage. Revenue consequently jumps to a few $100 million in 2026 and near $1 billion by 2027, in line with analyst consensus. Crucially, the macro backdrop is supportive. Interest rates ease slightly. The Fed maybe cuts from 5% to 3% by 2026, reducing ASTS's cost of capital and making future profits more valuable in investors' eyes. Under these conditions, the stock holds its current value through 2025 and trends upward as milestones are met. By January 2026, ASTS trades around $60, a bit above today's price, reflecting anticipation of 2020 SIXS broader service launch. Through 2026 and 2027, as revenue growth visibly accelerates, several 100% YOY, and losses shrink, investor confidence builds. The stock might climb to $80 by the start of 2027. At that point, ASTS could be on the verge of break-even, which tends to trigger a positive re-rating. By January 2028, assuming the company is profitable or nearly so with multi-billion-dollar revenue run rate, ASTS could reasonably trade around $100. That would equate to, say, 10 times 2028 sales or a rich greater than 100 PE on early earnings, pricing in further growth but not bubble level. This base case yields a solid return, plus 85% from current to 2028 or 16% CAGR, albeit with lots of volatility on the way. Aggressive bull case. Rapid adoption. Star. Performance January 2026. $85 January 2027. $130 January 2028. $180 in the best case scenario. AST Space Mobile experiences a near-flawless execution and enthusiastic market reception. The constellation deployment is not only on schedule but perhaps sped up, e.g. extra launches added, or efficiencies allow more satellites per launch. By mid-2025, ASTS already begins generating revenue through early adopters and government contracts, exceeding its $50 million guidance. The network's performance impresses carriers and end users, leading to faster customer uptake in 2026 to 27 than originally forecast. For instance, by 2027 ASTS might have a few million paying users via carrier plans, translating to $1+ billion in revenue, ahead of street estimates. Moreover, external factors align favorably, global smartphone growth continues, emerging markets eagerly embrace ASTS service, and competitors face delays, minimizing competitive pressure. Investor sentiment in this scenario is euphoric. ASTS is viewed as the next big thing in tech. The stock, already strong in 2025, we could see it rallying through the $70s by late 2025 on initial service news, hits perhaps $85 by January 2026. Through 2026, as quarterly revenues start leaping and major partnerships, like the Vodafone JV, start monetizing, the stock's climb accelerates. By the start of 2027, it could be in the $130 range. At that point, ASTS might be pricing an eventual dominance of a huge chunk of mobile broadband. Perhaps a large-cap tech or telecom company even rumors to acquire ASTS, further boosting speculation. By January 2028, ASTS could reach around $180, roughly a 3.3 times from today. This implies a multi-year forward PE still very high, as earnings would just be emerging, but investors in this scenario are valuing ASTS on its 2030 plus potential, akin to how early Tesla was valued on future volume, not current earnings. At $180, ASTS's market cap would be on the order of $40, 50B, which might correspond to 5 times 2028 sales or 25 times 2028 EBITDA, possible if the company is seen as a category killer with years of growth ahead. Important, even in this bull case, the road will be volatile. There could be spurts of 100% gains followed by 50% pullbacks. But fundamentally, this scenario is one where ASTS handily beats its rollout plan, faces no major regulatory or technical setbacks, and achieves something close to global ubiquity in mobile connectivity by 2028. Technical analysis and trends. AST Space Mobile stock has been on a roller coaster since its 2021 debut, reflecting shifting market sentiment around its story. 3-year chart and performance. ASTS went public via SPAC merger in April 2021 at $10/share. After a brief pop above $11, the stock entered a prolonged downtrend, hitting an all-time low of $2.30 in late 2022 amid market skepticism. From that trough, ASTS staged an incredible rally. By July 2025, it traded around $55, which means an investor who bought at the 2021 listing and held through would see a plus 440% total return, no dividends, and an investor who bottom fished near $2 gained 25 times their money. The stock's beta has been extreme. It dramatically underperformed in 2021 to 2022, then hugely outperformed in 2023 to 2024 as the company achieved technical milestones, like the 5G call from space, and as speculative interest returned. Overall, the long-term trend is up, but the journey has been extremely volatile and nonlinear. Momentum indicators. ASDS has exhibited strong upward momentum in recent quarters. The 50-day moving average is trending sharply upward, recently in the $40s, and in mid-2024 the 50-day crossed above the 200-day MA, a golden cross that signaled a trend reversal into bull territory. Currently, the stock trades well above its 200-day MA, which lies roughly in the mid-$20s, reflecting the low prices of last year. This large gap indicates bullish momentum, but also potential vulnerability. There is a lot of air below the current price if a correction occurs. The Relative Strength Index, RSI, on a 14-day period has often been in overbought territory in 2023 to 25 during big runs. For example, during the surge from $5 to $20 in early 2023, RSI went over 80. Recently, RSI has hovered around the high 60s to low 70s as the stock hit new highs, suggesting slightly overbought conditions. Typically, ASDS has seen brief pullbacks or consolidation when RSI gets above 70 as traders take profits. However, in strong news-driven rallies, the stock can remain overbought for extended periods. Support and resistance levels. As of mid-2025, ASDS is trading in uncharted territory, all-time highs in the $50s, so resistance is mainly psychological. E.g., round numbers like $60 or $75 might act as interim resistance where sellers emerge. On the support side, previous major peaks now become support levels. One key level is around $30, the peak in early 2023 and again in mid-2024. This area also roughly coincides with the 50-week moving average and would be a natural support if a major pullback occurred. Closer support may lie around $50, which is a recent breakout point. If the stock can hold above $50, that would be a bullish sign that the breakout is being validated. Below $30, the next strong support would be around $12 to $15, the highs from 2021 and 2022 before the collapse. It's worth noting the stock's high volatility means support levels are not guarantees. Intraday or interweek moves can slice through these levels. Stop-loss orders are advisable for traders, and long-term investors must be mentally prepared for big swings. 20 to 30% swings in a month have happened multiple times. Volatility and short interest. ASDS has been extremely volatile. Its one-year volatility is 100%. Stock price doubled and halved in the span of months. Part of this is due to a relatively small float and high speculative interest. Notably, about 25% of the float is sold short, a very high short interest that can fuel short squeezes. In fact, some of the rapid run-ups, e.g. the move from $20 to $50, were likely exacerbated by shorts covering en masse as positive news hit. A high short interest can also mean the stock falls quickly on any negative developments as short sellers pile on. The broader market's risk climate, often measured by the VIX Volatility Index, influences ASDS as well. During market stress, VIX spikes. High beta names like ASDS tend to drop disproportionately as investors flee speculative trades. Conversely, in risk-on periods with low VIX, ASDS often outperforms. Investors should expect the volatility to continue. Options markets imply large swings, and the stock's behavior is more akin to a biotech startup, binary outcomes, than a stable telecom. Risk management is key. Consider using limit orders, and don't invest more than one can afford to lose, given the unpredictable swings the stock is capable of. Technical outlook. In the near term, ASDS's chart is in an uptrend channel, but watch the volume and news flow. A break below the 50-day moving average on heavy volume could signal a trend change to the downside. Conversely, any breakout above recent highs on strong volume could indicate another leg up, possibly toward that $60 to $75 zone. With upcoming satellite launches and expected news, catalysts are abundant. Traders will be eyeing each launch success or setback for cues. The technical summary is that ASDS is momentum-driven and news-driven. Traditional valuation anchors don't apply, so technical levels can be blown through if fundamental news is powerful. Always align technical analysis with the fundamental timeline for this stock. Investment score, 60 out of 100, speculative. We rate AST Space Mobile a 60 out of 100 on our investment scale. This score places it in the middle range, reflecting a balanced risk-reward for a speculative position. The score is derived from factors like growth potential, market size, competitive moat, financial health, and risks. Upside factors, plus ASDS offers a one-of-a-kind growth story in a massive TAM. If successful, the company could achieve multi-billion-dollar revenues and industry leadership by 2030, yielding multi-bagger stock returns. Its strong cash position and partner backing, including blue chips like Vodafone and Google, increase confidence. These positives contribute to a high return potential component in our scoring. Downside factors, however, execution risk is extremely high. The technology and business model, while promising, are unproven at commercial scale. The company will likely burn significant cash in the next couple of years and may need to dilute shareholders or take on debt. Regulatory hurdles and competition from much larger players add uncertainty. These risks drag down the risk component of our score. The current rich valuation also limits near-term upside if any snags occur. Risk/return profile. A 60 out of 100 indicates a speculative buy suitable for aggressive investors who can tolerate volatility. It is not an endorsement for all portfolios. More conservative, income-focused, or short-term traders might score it much lower. In our framework, scores above 80 are strong conviction buys with favorable risk-adjusted returns, whereas scores in the 50 to 70 range, like ASTS, imply a decent potential reward, but with commensurate high risk. Essentially, ASTS has a high ceiling, but also a low floor, and our score acknowledges both. Investors should size positions accordingly, small weight, and have a long horizon. This stock could zigzag significantly before any payoff. Conclusion and call to action. AST Space Mobile embodies both the excitement and danger of a frontier tech investment. Its mission to connect everyone, everywhere via space is compelling and could create tremendous shareholder value by 2030 if successful. However, the road ahead is execution-heavy and fraught with external risks, regulatory, competitive, macroeconomic. At the current price, a lot of future success is already priced in, so new investors should be cautious. Action. For those with high risk tolerance, ASTS can be a speculative buy, but size your position modestly and be prepared for volatility. More conservative investors may choose to hold or watch from the sidelines until the technology is proven and revenues ramp up. From a portfolio strategy perspective, ASTS would fall into the high growth, high risk allocation bucket. It can provide uncorrelated returns, driven more by project success than by economic cycles, which is valuable, but it should not be a core holding for most investors. Monitor key signals, cash burn versus cash on hand, pace of satellite deployments, any early revenue figures or subscriber counts, and competitive moves from industry giants. These will inform whether ASTS is tracking toward our base case or veering into a less favorable scenario. In summary, AST Space Mobile offers an exciting story and substantial long-term upside, but it demands patience and a strong stomach. Action plan. If investing, do so with eyes open to the risks, keep the position size moderate, and regularly reevaluate as new data comes in over the next 12 to 24 months. The coming few years will likely determine whether ASTS truly connects the unconnected and delivers stellar returns, or whether the challenges prove too great. Samantha's closing note. This report is for informational purposes and reflects analysis at the time of writing. It is not personalized investment advice. The stock market can be unpredictable, and AST Space Mobile in particular carries unusual risks. Investors should perform their own due diligence. Samantha, the analyst, does not hold any position in ASTS as of this publication.
Congratulations to you, because what I know is that 1% of the people who will drop into this video will finish it. 1% of the population will come away understanding that there is a new opportunity for them to gain the knowledge that has up until now only been available to Wall Street so that they can make better investment decisions and improve their lives. 1%. So if you're here listening to this, you are a 1%er and you have a chance. I'm going to change the world of investing, much as ATS is going to change the world of mobile access to phone and internet. I'm building a billion-dollar company. I'd like to invite you to come along on my journey. Come to Best of Us Investors, look at what we're doing, and share in the investment opportunity of a lifetime.